Hey guys, so we're going to talk about market segmentation and kind of outlining those blocks on a smaller scale. So we're looking at the dollar yen on the daily chart. And what you want to look for in terms of this whole market segmentation is spiked levels and levels that have held for a long time. And so what we're going to do is you're going to segregate a market just based on those particular levels. And again, we're going to go with the ribbon that goes across the entire thing. We're not going to dive down into the smaller into the smaller spectrum where we're doing little individual boxes. That we'll get into. But again, we're going to go across. We're just going to talk about the mindset behind identifying some of these levels. So what you want to look for is the heightened areas, right? So we'll identify this first as dark teal. Okay, so there's our first segment. So from here, what you want to look for is you can do the next piece one of two ways. You can do the next piece as just the spike. So you can take the spike up to the low, right? So take that just that free run straight up to the low, or you could take that free run straight up to the high and where it kind of stops. I personally like, if we have clear space like that, I like taking it up to the low and then using that as its own little segment. Why? Because when we break back into this, if there's no structure, then you can typically, like, there's a lot of structure here, but there's not much here. So you can typically give yourself a fairly aggressive target if you're within one of these zones, and if you have fibs that line up with the bottom of one of these zones, or etc. But you can be more aggressive with your trading based on the type of zone you're giving yourself. So I personally like to do it that way, where I'm marking off marking off, that more of just a free running zone, and then from there I'll look at doing this, which is my next zone, which has a lot of consolidation in it. All right, so now we've got a zone that's got a lot of different areas in it. So even though the last time we were in here, we failed to break below this level, right? You can see that once we do, we've got structure. It's not just blank space like this, which has maybe one piece of structure within. So now what we'll look to do is, again, we've got a fairly, if you start left, you've got a fairly free run straight up to this low. So I'm going to do what I did on the prior section and just go straight up to this low. So with this, go back to that tealish. Now we've got a pretty clear path here, but then we've established structure here, which is a good thing, because when you're establishing structure in an area that doesn't have any to begin with, right? So we just shoot straight up here, and that's kind of what establishes this zone. Now there's starting to become transactions within this zone, and it makes for safer trading, right? So had you been aggressive here, right, you still would have filled your targets, but along the way you would have slowed down. So it's not as, like, if we enter here, if we enter this purple zone again and come all the way back down, until proven otherwise, you can just assume that it's going to trade with some aggression. So we could have made that same assumption here, but instead we just started to formulate structure, which is a great thing, because now when we go back into that zone, as you can see, we have a lot to work with. And that gives you two things. That gives you the confidence that there's volume in there. So there's confidence that there's going to be lots of transactions taking place, and there's confidence that now there's structure. So you can expect quick, sharp moves off of that structure. And then finally, we have our heightened or our top zone, and we can go ahead and identify that. We'll just do that as a dark gray. So now you've got your market segmented off, and you can go ahead and start to plot support and resistance. And for the first little bit, that's all we're going to do. We're just going to plot support and resistance. We'll start left, and we'll run up. You can see that as we're going through and building this structure, right, as we've built this structure from within, the next tests of it, right, the next time it runs through and tests this zone, we're starting to respect that structure that we did go ahead and build, despite the fact that previously we just shot straight through that area. So we'll just use this as an example, right? So come back up, retest here, break into this zone, clear the zone, clear into the zone, come back up and retest. Kind of like we talked about in the intro video, if you were to draw some fibs down here, this would probably line up pretty well to it looks like a 50% retracement off of this swing move down. And then from here, as we get into the more like the more zoomed in view and the more mundane present view, you can start to build out a little bit more structure as you get better visibility into the wicks and where things sit. And so now we're in this zone, and we can do, level to level trading, right, is just going to work out perfectly. And especially when you start to incorporate Fibonacci into some of this stuff. So like I said, that's a perfect, just about a perfect 50% retracement. We dip a little lower, get a nice 50% retracement again, test that height or that top part of the zone. So you give yourself, especially for again on a daily, give yourself for swing trading purposes. Our 50% retracement was right here. We slow down a little bit and spike up to this 115.55 level. Well, your stop loss can sit in the next zone now because you've got a little bit of a gap. You've got a little bit of confidence that would have to, in order to break into this zone, would need some heavy volume to push us up, retest, and then would start to move towards the other side. But you can give yourself a little bit more wiggle room, right? Like right here, we dipped lower, but if we had done just a little bit more technical analysis, we would have known that, now if we were entering long right here, we could put our stop down below, right? So stop down below, even that 61.8, that's not a huge move to account for. So what I want, and feel free to send me your markups and send me send whether it's Facebook or email, send me things that kind of outline you going through and doing this. And really all I want at first is just marking off market segmentation and then identifying some support and resistance within. And then as you get into the nearer future, start to mark off some support and resistance. Eventually, we're going to get into starting to incorporate Fibonacci trend, etc., and using these levels as as additional support and resistance and strong market boundaries. But for now, what I want is to focus on the smaller time frame or on the larger time frame stuff and just work on basic market segmentation, because I know that this is a new concept to a lot of people. It's not difficult, but it's a new concept to a lot of people.